Welcome to the Broken Pie Chart Podcast, episode 77. I'm your host, Derek Moore. This week, we're going to be asking, will Tesla actually join the S&P 500 index? What's required to join the index? In other words, what does a company need to have before the committee will sort of allow them in? Can they make exceptions? We'll look at what their earnings are, their market cap. Where would Tesla fall within the S&P 500 if it was added today? And when do they make changes? And what are some sort of historical things that happen with indexes? So without further ado, there was first of all, what are the general requirements to go into the S&P 500 index? And why do companies, why do some investors want that to happen? Well, one of the main reasons why is, in theory, if you're added to an index, if index funds, so, the SPY, let's say, or the Vanguard, S&P 500 equivalent, Fidelity, anybody has, an S&P 500 index fund, in theory, those indexes, which hold a lot of money, would have to go out and purchase shares. So often, if people think a stock is going to be added to an index, they might think that's good. They might want to own that. Obviously, getting dropped from an index, wouldn't be as good. And by the way, Tesla is already in a big index. They are a member of the NASDAQ 100 index. And that NASDAQ 100 index is a market cap weighted index. And so you take the number of shares outstanding times the price, that gets you the market cap. No surprise, Apple is the largest weighted. They make up a little over 12% of the index. Microsoft, a little bit over 11. Amazon, a little bit over, just shy of 11. So Apple, Microsoft, and Amazon make up, over 32% of that index. Tesla, as of the recent data I have, they actually are number 7 on a market weight, a percentage of the index. The larger the stock, the more impact it has on the index. And they were about 2.6, if we round up a little bit, based upon, their recent closing price. So they're already in the NASDAQ 100 index. And generally the NASDAQ 100, from memory, I think you have to be NASDAQ listed. I don't know if they still require a NASDAQ listing. I'd have to look at that. But U.S. companies in there. But so what does it take to get into the S&P 500? And as you'll hear in a second, they've got an earnings report coming up. And that could potentially be a factor. So to qualify to get into the S&P 500 index, which of course is also a weighted index, it's got more than 500 companies, but some stocks have A and B shares. And anyway, we'll leave that for another time. But to qualify to be in the index, according to some of the guidelines, must be a U.S. company, have an unadjusted market cap of at least $8.2 billion. So remember, that's the number of shares outstanding times the price of the company. To put that into perspective, Apple and Microsoft are like, 1.5 trillion. At least 50% of the corporation's stock must be available to the public. So if it's too closely held, right, that would be a problem. Stock must be at least $1 per share. Certainly Tesla meets that. It's got to file a 10K. At least 50% of its fixed assets and revenues must be in the United States. And here's the one that kind of has some people on the edge of their seat. And finally, and this was, I found this by Googling this. You can Google, there's an article by The Balance. I knew most of this, but I wanted to provide a reference. Of course, I'll put this and other things in the show notes. But they say, finally, it must have at least 4 consecutive quarters of positive earnings. And, they don't mention it in their article, but I know it's mentioned other places. I believe the last quarter has to be positive. So, that's, as we look at Tesla, where does that put them? Well, Certainly they meet on the idea of the market cap. Now, they've been quite volatile. And I took a look the other day and, remember when their price was something like 1,700, I think it closed Friday at something like 1,500. They actually, if they would have been in the S&P 500, they would have been on a weighted basis in the top 10. So they closed on Friday, I believe, right about 280 billion. Let me look at this just to make sure and give you the right number. About 278.2 billion is their market cap. All right. But here's the issue with them. They have had 3 quarters in a row of positive EPS or earnings per share. You look back, so they reported April 29th, positive $1.14, positive $2.06. Reported at the end of January. Reported in October of last year, positive 186. Prior to that, their previous, this is July of 2019, they were negative 72 cents per share. I'm not sure if these are, GAAP, generally accepted accounting principles, but you get the idea, right? So here's the issue. They're going to report earnings, or scheduled to report earnings July 22nd. Looks like the estimate, and the estimate is actually, so the consensus analyst estimate is actually negative 0.28, so negative 28 cents per share. And that's actually up. It was negative $1.59 back on April 17th. So analysts have adjusted their earnings estimates up, but we'll see. They would have to, at least according to the criteria, it seems to be, the general criteria, they would not have the most recent quarter of positive earnings, and they certainly would not have 4 quarters in a row of positive earnings. So, July 22nd, if you're somebody who is waiting to see if they meet, the general criteria, that is yet to be determined. Now, in a Fortune article, and I will link to this as well, let me see who the writer here is, Jen Weitzner. I hope I pronounced her name right. If I didn't, I apologize. Wrote an article. I'll link to it. One of the things that she makes mention of is that apparently there is, let me find it in the article. They're saying the committee, she actually in the article points to a Bloomberg Intelligence article and says there's a little bit of fine print in the S&P Dow Jones Indices official documents, and that is the committee reserves the right to make exceptions when applying the methodology if the need arises. Such discretion, the analysts argue, is an acknowledgement the index rules occasionally need to be overridden. I think in that they also made mention in the article. It's unclear, though, if the S&P committee has ever actually bent its own rules. Somebody for a spokesperson for S&P Dow Jones Indices had told Fortune. So not sure if, they actually have ever done a change like that where they've actually overridden it, but according to their methodology. Now, by the way, let's say they report earnings on the 22nd and the committee says, hey, that's great. We're going to put you in the index. Generally, what happens is, now they did a rebalance in June, and I can't remember if they actually put off the rebalance that was supposed to happen. And, they were supposed to do one probably in April, but I'd have to double check. But they're not scheduled again to do another rebalance until September 21st. And so the article in Fortune, that same one, also says the committee does meet monthly and could potentially make changes to the index's constituents then. But it also rebalances the index each quarter, and that's not scheduled to happen, as I mentioned, until September 21st. So it's and they also mentioned too, changes to the S&P 500 aren't made based upon when a company gains or loses eligibility, but rather whenever the index committee deems necessary. And they say all that's to say there's no future date on the calendar when next changes will be made. They do mention, though, that in the past, typically they've done the announcement anywhere from 4 to 10 days ahead of when it actually takes effect. So that gives you an idea. So we kind of went over why it's a lot of people perceive it to be a good idea if you're in an index. Why? Because the indexes have to buy you. Where would the 278 billion in market cap, where would that put them? It actually would put them a little bit ahead of, I kind of pulled up some of the market caps from the other day. And if I do a sort based upon market cap, as I said, 1.67 trillion is Apple, 1.5 trillion, Microsoft, 1.4 trillion, Google's over $1 trillion. And then if Home Depot is the one, they're 280 billion. So based upon Tesla's market cap as of Friday, if they were in the index already, they would be a little bit below Home Depot and ahead of Intel. Intel's 254 billion. Those are dynamic. Those are going to change. As I said the other day, I think the other day when they reached their all-time high, there was something like 380 billion. Imagine that. It's like just 100 billion difference in a couple of days in market cap. But they actually would have surpassed Walmart and J&J. So remains to be seen. As I said, they're already in the NASDAQ 100. Zoom video, the Zoom video conferencing, they're actually in the NASDAQ 100 already. And I'd have to find the exact methodology for that. So it's interesting though, like why do they make changes in general, and what happens? I'll give you an example. June 22nd, there were 3 additions, 3 subtractions. So who got kicked out of the index? Kicked out's not a right way of saying it, but you kind of get what I'm going here. Where I'm going, Harley-Davidson, Nordstrom, Alliance Data Systems, they were removed. And that was just defined as a market capitalization change. And it looks like they added Teledyne, Biorad Laboratories, and Tyler Technologies, right? More recently, one of the names that's probably if you watch any TV or you get a newspaper, because they always give you those inserts, Domino's Pizza was added May 12th to the index. And I mentioned, we did an episode, I guess it got about a month ago right now, and we were talking about Domino's a little bit, and it actually, on a compounded annual growth basis, has done better than Google. They IPO'd right around the same time. So I'll certainly link to that. That's where I had a guest, William Rind, on, and we talked a little bit about Domino's. It's a technology company. The other reason why people would get removed out of the index, sometimes, companies get acquired. So, for example, let's say Apple acquired Amazon. Okay, I'm just hypothetically talking, right? Well, let's say it was an all-cash deal and there's no more Amazon stock. There's only Apple stocks. Okay, so Amazon would get removed from the index. Okay, sometimes things are moved to other indices. For example, August of 19, Foot Locker was removed from the S&P 500 and moved to the S&P Mid-Cap 400 index. Okay, so companies come in and out. It's a living, breathing thing, and it does slant towards momentum, because the larger the company, the more weight it has in the index, and the more it affects how the index changes. So most of these are market cap weighted. The Dow Jones is sort of the outlier. They actually are price weighted. So you could have the largest stock on a market cap basis. If their price is number 30, because there's 30 companies in the Dow Jones, they would be weighted the least. Give you an idea, on the top, we talked about the NASDAQ 100, the S&P 500 as of the end of June. Microsoft was a little over 6%, Apple 5.8%, Amazon 4.5%. And then you have, so if Tesla did go into the index, by my calculations, it would probably be, probably like 0.7-ish%. Of course, that can change hour by hour, minute by minute. Tesla's a pretty volatile stock. I have no idea whether it's going to go higher, going to go lower. I'll leave that to other people, but it is sort of interesting how much the market cap, again, that's number of shares outstanding times the price, will change around. So July 22nd is the earnings date. We'll see if anything changes there. It's worth noting too that historically, when you think about, a lot of people are pointing to technology having, information technology as of the very end of June was something like 27.5%. Energy was only 2.82%. Material was only 2.5%. Healthcare was just under 15%. If you flip that, though, I shouldn't say flip it, but if you went back and looked at, the S&P 500 index in the 1980s, you would see energy dominate. And that's how that rotation happens. It's market weight based, market cap based, how they weight it. And so as companies, prices go lower, they become less of a weight, less of an impact on the movement of the underlying index, okay? Now, in fact, if you look just on a raw, like what were the largest companies in the world, 1980 was, IBM, AT&T, Exxon, Standard Oil, Schlumberger, Shell, Mobil, General Electric, Eastman Kodak. Kodak doesn't even trade anymore, right? And then you look at, let's say, during the tech boom, and it was, it was interesting. I remember Microsoft got added, I think it was the late 90s, and to the S&P 500. Previously, they were only on the NASDAQ. But if you look at, 2000, it was Microsoft, Intel. They're still up there. But Exxon was one of the biggest companies. 2001, General Electric was the largest company. And then you look at even, now as we mentioned, Apple, Alphabet, Microsoft, Amazon, Facebook, Google. Is Tesla going to be in there? We'll see. So hopefully this gives you an idea of what it takes to get into the index when they rebalance. I'll actually link to a couple things here. There's a trading calendar that the NASDAQ puts out, and it actually shows, when the, for example, the Russell 2000 index, when that reconstitution is, when deletions, additions are announced. You can look at option expiration dates, quadruple witching, exchange holidays. But of course, the S&P index rebalances. And the next one I have on here, as I mentioned, looks like September 18th, I believe, is the next one. And then you'd have to go to December 18th. These, I think it's normally on a Friday. And prior to that, I think, let's see. Yeah, that would have been June 19th was the most recent one. So I'm going to link to that, link to the Fortune article, gives you a little bit of that. I will link to, I usually wouldn't link to a Wikipedia, but they actually, there's a list if you want to see the changes, companies going in, companies going out. I thought that was a decent resource. And so we'll be following that. Remember, please share this with someone that you think might enjoy it and might find it valuable. Go ahead and download the past episodes. If you want to give us a 5-star rating, please go ahead and do that. And keep the questions coming. This, again, was a listener suggestion. Said, hey, what happens when, how do we even know if Tesla will get into the the S&P 500 index. So we'll keep those questions coming. I'll link to those in the show notes. And until then, we will talk to you all next week. Have a good week.